Hey y'all, my investy besties, welcome back to the channel. If you are new to Mommy Trader, welcome. I hope that you stick around. And if you are a returning subscriber, thank you for coming back. I really do appreciate it. So you guys already know, on this channel, I'm just documenting my journey to financial freedom. Well, my family's journey to financial freedom through investing in the stock market, real estate, crypto, and just overall increasing our net worth and bringing as many of my people along with us as possible so we all can get there together. Okay, so let's talk about this video. Now, the topic to this video is one that I feel like isn't talked about much in the financial investing community, especially when it comes to something that's more internal in terms of feeling. And I can tell you, number one, that investing will really challenge you in some aspects, and you really have to kind of build yourself and change your way of thinking when it comes to investing in the stock market. Now, I'm going to have a heart-to-heart with my people because you guys know I have to keep it 100% real and open and honest and transparent with you guys, especially when you see the market go down, and especially if you are a new or a beginner investor starting this journey. So I have the Robinhood account up because you know what? Today the market is down. The Fed Chair Jerome Powell is going to speak today, and every time that brother speaks, the market crashes, okay? And so I figured this was a great opportunity to pull up the account so you can see that, you know, this account was, let me pull up this so you guys can see, okay? So I can show you guys. March 13th, this account was at $14,331. What is it at today? $13,000, so almost $1,000 less, okay? And I gotta tell you guys, sometimes when you see your accounts go down, it can really spark this depressing, sad state in yourself. I've been there. There were times when I was investing earlier in my investing journey where I cried. I legitly cried when I put money in the market, and then the next day it seemed like the market would tank, and I felt like, oh my goodness, I must be cursing the market or something, because it seemed like every time I put money in, it would go down. And this was hard-earned money, okay? This wasn't something from a trust fund or a rich uncle. This was money that my husband and I earned that it was blood, sweat, and tears. And when you put it in and you see it go down, and it's like, I cried, I was upset, I was furious. I said, you know what, I am done. I am not going to invest again. I'm just going to save my money under a mattress. But one thing that I really had to learn, and this is where, number one, keeping investing in its proper place, because investing is not the end-all be-all, guys. I know sometimes when you're on this journey or you're starting your journey, you want your accounts to grow fast. I'm not going to act like I don't know how that feels, but I had to really learn patience, and that is so important. I'm going to pull up this article. Now, this is a really good website that I enjoy coming to, but more specifically, something that Warren Buffett preaches, and it's about the psychology of investing, and that investing is really 90% psychology. That means knowing how to keep yourself under control, knowing how to think differently. Like, this is not supposed to be an emotional journey, although it has your money involved, but rather changing your way of thinking, having goals, really executing this more on the business side versus the personal side. And only 10% of it is about the skill. So you can know what a stock is, what an index fund is, you can know all of that. But again, the market is the market, and the market ebbs and flows. And when you can get it inside of yourself, sorry guys, that was my phone. When you can get it inside of yourself that, you know what, it's okay, the market dips, this is normal, it's not the end of the world, guys, then you will see that you will be able to have more control over yourself and over your emotions, especially when the market is down. That's like so key, guys, because when you get that understanding in your mind, like, you know what, the market is going to dip. That's not the end of the world. If the stock market crashed forever and never came back, Warren Buffett would never be a billionaire. Corporations would fall. Literally, the world's economy is tied in to the stock market. So you don't have to worry about, okay, I'm gonna lose all of my money. Now, that if you are like YOLOing on GameStop, that's a little different. But I'm talking about if you have an index fund or strong companies that you believe in, you don't have to worry about the stock market just crashing and taking all your money and it's never going to come back. That is not how this works. Money comes and goes all the time. The world, the companies that you and I are a part of, that we shop at, that we use services and products of, are not going anywhere. Amazon is not going anywhere. Shareholders are not going anywhere. So when you see the market down, tell yourself, you know what? I am going to buy on the dip. I love talking about that on my channel. Buying on the dip, because you know what? That means it's on sale. You wouldn't go to, Walmart or Target or Neiman's and Marcus and buy something full price if you didn't have to, right? You would buy it on sale. That's why Black Friday is so popular. You can get like so many things at an insanely cheap price. Well, think of it the same way when it comes to investing, okay? And as you can see, this article, I love that it talks about how Warren Buffett is really, really patient. He is extremely patient. He is not a day trader. He is not like one of these get rich quick type of investors. And he is the best investor of all time. I mean, that's kind of the consensus across the board. He really is the best investor of all time. And this man, and look at some of the examples here. He has held Coke for 32 years. I mean, I was like, what, 4 when he bought his position in Coke? I mean, and not selling and panic selling when you see the market dip down. Do not do that, guys, especially you beginners. And another tip, if you have $100 and you want to buy, say, let's just say, for example, Coca-Cola, which is about $50 right now, you don't have to put your whole $100 in at one time, okay? You want to make sure that you just put a little bit on, then you can wait a couple days or a week, then put your next amount on, then wait a couple days or a week, then put your next amount on. That's why 401ks are so successful. It's because people regularly invest in them and just leave them alone. And you don't have to feel like you have to stalk the stock markets and kind of have your alert set on your phones and you're up in the middle of the night, you're losing sleep because you are scared your money is going to crash. Remember, guys, when your markets are up, you are feeling so elated, so happy. You are just like feeling so good. I'm telling you guys, when I go to the all portion of this Robinhood account and see that it's up 95%, that makes me feel like so excited and so happy and thrilled. But on days like today, it can make you feel like, oh man, like, and the thoughts will come into your mind. Should I just sell? Should I panic sell? I've done that before, guys. You don't want to do that because the market always comes back. It always trends up. You may have dips every now and then. And let me tell you guys, when the market goes down, that's healthy. You should never want to invest in anything that's constantly just going up. There's no pullback. That actually raises red flags to me. There's no pullback and the stock just keep going up and up and up and up. That is when you can get in a trap and you can be the one holding the bags at the top because people are. And you know what? And now speaking of that, a lot of the hedge fund companies and like the real intense traders, they are the ones playing off of your emotions. So they will pump a security, a stock all the way up and you see it and you're like, oh my goodness, I got to get on it because if I don't, I'm going to miss my chance at making $100 million. And that's like snarky because I was there at one point. So you see the stock going up, it's at 50%, 100%. You say, you know what, let me just dump all my money into this stock and maybe I can make some change. And you know what happens? You'll be the one holding the bag as it's falling down because those hedge funds and those computers and those traders are getting their positions out. They're selling. And so again, guys, you just want to make sure that before you put anything in anything, that you do your research, that you have a solid plan. Write it out. How many years do you have till you want to retire? How many years do you have when you want to start withdrawing from your your investments to live on? And then when you figure that out, you need to come up with your in between. What different accounts are you going to use? What type of methods you are going to use in terms of building those portfolios and those positions up so you can get to your goal, right, guys? And remember, guys, you don't want to kind of YOLO on different stocks because that can really yield some not even just depressing and sad emotions, but suicidal emotions as well. I'm going to put up this article. Now, you guys probably heard about this guy that took his life. Alex was only 20 years old, and he YOLO'd on a stock, unfortunately, and it showed that he was down 730,000 when he really wasn't. It just, the platform didn't have a chance to update. But again, I mean, think about it, guys. If you saw negative 730,000, look, if I saw negative 30,000, you know, that would make my stomach kind of tie up in a knot. So imagine seeing almost $1 million. He was 20 years old. Now, granted, you can say whatever you want. The fact of the matter is this guy was young, and he just didn't have the understanding of what trading and investing entails. And again, trading on margin. Let's talk about margin real quick. Margin basically is just trading on a loan from the broker. I don't recommend that, especially for beginners. You should trade with money you put in. So if I put in $100, I am only buying $100 worth of stock. Sometimes the platforms like Robinhood, Webull, M1 Finance, Vanguard, Fidelity will let you have access to a margin account. Think of it as a loan, and we'll say, okay, instead of the $100 cash you put in, we'll give you $500 total so that you can have that to trade with. And what if you buy a stock with that whole entire $500 and then it tanks and now you're negative $500? You still got to pay them back that money. And so I figure, you know what, if my money goes down and is negative, it's still my money versus my money and the platform's money or the bank's money. So again, try to stay away from margin, guys, because that is, you know, you really have to know what you're doing. I can't stress that enough, guys, because when you see the negatives and you gotta now owe the platform, you know what, it could just really be like this guy. It makes you want to just kill yourself because you know you won't be able to pay that money back. So that's just like my PSA announcement. Just stay away from margin. Just have your cash account, trade or invest with money you personally put in. Okay, stay away from margin. But again, guys, this is just the extreme of, you know, psychology in terms of, or psychologically with investing, is that, you know, you could lose a lot and, you know, unfortunately kill yourself. And that's not, you know, something that he needed to do. But I understand. I'm not going to pretend like I don't get it, because in this investing life, sometimes it can be like that. And speaking of that, if any of you guys are feeling like that, please reach out for help. Do not just keep it into yourself. Even if you have to email me and it could just stay between us, I'll be more than happy to kind of be your investing buddy through this, helping you, answering questions. You can do a screenshot and show me your account, anything along those lines. Now, I'm not a financial advisor, but again, sometimes we feel like we need somebody on this journey who's open, transparent, honest, who will keep it real, keep it 100 about what goes on in this investing world. And so again, guys, I'm just saying that when you are investing, you got to think about it different. You got to think about this as a business, which is something I had to really learn. And that is what helped change the way that I invested. I came up with the plan. So when I saw the account down $1,000, I didn't panic. I said, you know what? I got some extra cash on the side. I'm going to buy the dips, because if Tesla is on sale, if Coke is on sale, if AT&T is on sale, I know I wouldn't buy anything for full price in the store. So if I'm talking about investing for our future, I'm going to buy the stuff when it's on sale. I rarely like to buy anything when it's green. So if a particular stock, like over here, Cardinal Health, is green today, it's up 1.38%, I try not to buy that because I don't like buying when it's going up. But with Walgreens is down over 2%. That is where I would want to buy some more shares in. That is my philosophy when it comes to trading and emotions. And that really helped me so much, because I said to myself, you know what? Bad days are not necessarily bad, because the Warren Buffetts, the Kathy Woods, these hedge funds that are investing people's retirements and all the billionaire and millionaire monies, they are buying when the market is red. Remember last year, guys, this is great. Remember last year when the market tanked in March and you saw how the market came back with a vengeance? Imagine if you bought stocks then. you would have been rolling in the money, guys. So again, I really hope that this video helped you guys and encouraged you. If you have any questions, just leave them down below. I'll get back to you. Don't forget to subscribe and like the video. Share it with a friend too, guys, so that we all can get on this together. And I'll see you guys in the next one. You stay blessed, okay? I'll see you later. Bye.